Murtuza Arsiwalla, Director of Research at Kotak Institutional Equities, now joins in to help us understand what's happening here. Hi Murtuza, it's Amina joining in. Before I talk about the Q1 updates for the real estate sector, what we did see is that in the second quarter of this financial year, we've seen a significant $2.5 billion of foreign money come into the space. The sector is supported not just by domestic participation, but international players as well. Do you feel like this is largely diversification, or is it a fundamental material improvement that the sector is currently going through?
Morning, Samina. Thank you for having me over. Essentially, the way you want to think of it was, if I were to take a period 3 years prior, the sector was not amongst the favorites. Business performance was not to the tops. And there has been, that under ownership is sort of getting covered up in a sense. Business performance for real estate players has been fantastic. I mean, if you look at DLF, which seems to be flashing on your screen right now, being the largest player, a couple of years ago, you were looking at annual sales of about 2,700 crore. That number has moved 5x today to almost about 15,000 crore. So there's been a meaningful shift in business performance. And what's driving that is a combination. There is the cycle which seems to have turned for the better. Market share gains for the larger players are for real. There have been a lot of shifts even in terms of the regulatory environment, which is sort of favoring the more organized players. And it's a combination of these factors which is driving stock performance, business performance, as well as making good the prior under ownership.
Let's break this down, right? And I'm referring to the Collier's report that came out recently, and they've, of course, broken this down. They've said industrial and warehousing segment has emerged as a front runner in terms of absorption of FI flows into India. What do you think? Commercial, residential, warehousing, where does the bias sit in terms of the recovery that the sector is charting?
In the listed space, which is where a large part of our interest lies, there is no direct play on warehousing just yet. It's an upcoming and emerging sort of subsegment, given, e-commerce is playing an even more prominent part in our day-to-day lives. So warehousing is definitely an opportunity that we are pretty excited about. Unfortunately, we do not have enough direct plays. In terms of commercial real estate and residential real estate, sure enough, on commercial, you have direct plays in terms of the various REITs. On residential, there is a plethora of stocks out there now, even more getting listed. Both have their own individual dynamics. So where on residential real estate, the broader theme is the cycle recovery as well as market share consolidation, which keeps us excited. Inventory levels per se are at sort of historical lows, so roughly about 15 months of sales, which is as good as it gets. As far as commercial real estate goes, you did have a bit of a hit on occupancy levels through the course of the pandemic. What didn't help their cause was the SEZ regulation, which did take a little longer than was initially anticipated and led to increased vacancies in the SEZ areas. Both of these pieces, as far as commercial real estate goes, seem to be solving for themselves. So a lot of IT companies, you hear incremental commentary about them making it more obligatory on the part of the employee to return back to office. That's one part. On the SEZ piece, the government in December sort of did suitably amend the regulations to make good that loss of occupancy in SEZ spaces. And that's beginning to see, the previous quarter when we spoke with companies, they said the government's acted pretty fast post sort of amending the regulations, where approvals have already started coming in for denotifying part of the SEZ areas. The operational benefit of that will likely start coming in the second half of the current fiscal. But I think from here on, as far as commercial real estate goes, things could get only better with occupancies slowly creeping back to pre-pandemic levels. So each of the sub-segments that you pointed out have their own strengths areas. We're generally bullish across the spectrum, each with their own sort of opportunity set.
Murtuza, good morning, Neeraj here. When I read your last note, and maybe it is not your last note, but the last note that I read of yours, you were fairly constructive on some of the northern-based players. I'd seen mention of a DLF, mention of a Signature Global, etc. Are you preferring that NCR geography from a real estate play perspective, or was it my imagination?
Well, I don't know which is the last note that you read, but let me give my current thoughts.
Sure.
Nonetheless.
Yeah.
I think we're generally constructive on residential real estate. As far as NCR market goes, since it's something that you specifically pick up, yes, we are constructive, DLF and Signature Global. In recent times, which is more, let's say, the last 1 or 2 quarters, there has been an element of concern that residential real estate prices have come up very, very strongly in especially the Gurgaon market. In FY24, residential prices in Gurgaon were up about 27%. And if I were to look at the last 2 or 3 years sort of trend, you could argue that Gurgaon prices have near doubled. The concern that the street is grappling with is, has it been really too much of price appreciation, and could that play spoil sport? Our view, yes, for sure, prices have appreciated very strongly and is an area of concern. But if I look at the underlying business performance as late as the last quarter, our DLF was still able to sell out the second phase of Privana with as much as 56 billion of sales. Signature in June was able to sell out, from one project that they launched in Sector 71 as much as 27 billion of sales. Now, mind you, it could be a tad more soft in terms of the underlying demand versus what you were seeing in the preceding 6-9 months. Having said that, having sold out a project, I mean, Privana per se, it was the second phase launch in a matter of 6 months. So I'd say even if projects are sold in a matter of 6 to 9 months, let aside days or weeks, I'd still say it's a good cycle. And for the leading players, I think they have enough ammunition. DLF, notably, the large land bank that it still has access to continues to hold its dominant space in the market. So that's how it is. There is a near-term concern, but I would look at that, I would be opportunistic about that relative underperformance, if at all.
Murtuza, the other question is, a lot of these real estate players, and again, maybe stick to NCR, maybe go to Bangalore, whatever it is, are offshooting into non-residential. I heard you say that you are more constructive on residential, but for example, let's say in NCR, Anantraj has this whole data center addition to itself. There is Max, which is also having this mix of commercial residential with New York Life partnering them. Embassy has this large piece of maybe not co-working as much, but certainly hospitality, as does Prestige, etc. So while you're constructive on residential per se, are there add-ons coming into any of these which impress you enough? Geography agnostic, of course.
So let me qualify that some of the names that you mentioned, we don't cover them. And so my comments would be more from a sectoral perspective as opposed to company specific. But let's put it this way, when you look at it, the common underlying across the board is land, right? Land is the raw material, whether it's commercial, warehousing, residential. And different companies have had different strategies around how they want to play it. Some players are more comfortable with a pure residential play. Some are pure, if you look at the REITs or if you spoke to the private equity players, they'd say, the residential landscape brings about an element of uncertainty, whereas commercial has this sort of regular stream of annuities, which is of comfort to them. But if I look at a lot of the players who've been around for long, I think they'll like to strike a nice balance. In an interaction that I had with Lodha more recently, now they're largely a pure play residential, but they're building some amount of annuity streams, right? Be it through a warehousing business or even some office space. And the way they think of it is the residential piece could be cyclical in nature. We are in the brighter spot of things right now. But, to counter that cyclicality, some amount of stability and cash flows that annuity brings in is good. And so companies have always had a mix and match approach to it. If you speak to a player like Oberoi Realty, he has a mix of, mostly mixed use developments. If you look at his project in Goregaon, or even the upcoming one in Borivali. And their thought process is the the alternate assets. For instance, you put in a residential apartment, but you also put in a retail mall, you also put in some office spaces, put in a hotel out there. It just improves the entire ecosystem of the development. So a lot of players have gone for that mixed use development for different reasons, be it some amount of stability or continuity of cash flows, be it in terms of developing a larger land bank or an ecosystem. And that's how players have played. And usually you've seen this with more larger players where there are mixed use sort of developments. That's not an option that, standalone developers usually have.
Murtuza, we've seen data that shows that the number of houses registered in Mumbai has gone up significantly, 13% in the month of June. You've talked about the north. What happens to Mumbai-based developers? So do you like a Macrotech? Do you like an Oberoi, Godrej, Suntec, Realty? Do they feature on your buy list at the current price?
Tricky one. Prices are constantly sort of beating us in terms of expectations. Stock performance has been extremely strong. But we do like, so while we did spend some time talking about NCR, it's not that we don't like players in Bangalore or Mumbai or the micro markets. I think what I'm talking about, Samina, is the broader trends that seem to be holding. If at all, NCR does make me nervous as much it makes the street in terms of the pace of price increase. Mumbai has been a far more measured market, with price.
Oops, Murtuza, I think we might have lost him, but yes, continue, Murtuza.
So, yeah, I hope I'm audible.
You are audible.
I'm saying, okay, fantastic. So I said, well, NCR is something that does make us nervous for the price appreciation, but it's not, Mumbai with a more palatable price increase in single digits. It's still a good market, and it's the largest market by far. So we are constructive on players like Lodha or even a Suntec, and for that matter, even Bangalore-based players, be it a Brigade, is something that we've liked over a period of time. Price, business performance, they're constantly sort of beating us on the upside, and there's constant evaluation. But that's an ongoing sort of battle that we face.
Lastly, Murtuza, stock or REITs for retail investors? And if REITs, then which ones are your preferred picks?
I think it's not an either-or question in my view. So someone who wants to take a more modest risk and looking at a yield profile, then it would be REITs. Someone who's chasing a more higher growth in the larger residential opportunity, maybe with a slightly higher risk profile, given the lower predictability of residential real estate, should probably go for stock. So it's really on each individual sort of risk appetite, horizon, and what they're looking for from that portfolio. Typically, REITs would do a 15-20% total return, which is a combination of the yield and the stock price appreciation. Whereas residential real estate stocks, they would not have the benefit of that yield profile, but capital appreciation because of very strong growth numbers. I mean, just look at those numbers. Last 3 or 4 years, 40 to 50% CAGR growth in sales, which is huge. And even for the numbers, I mean, Lodha reported this morning, 20% growth in sales is still a great number coming off a very strong base.
Okay. Murtuza, great having you as always. Thanks for taking the time out, and maybe talk to you post the Q1 numbers are out,
Sure.
just to get a sense of how you feel about them.
Sure. Thanks, Neeraj. Thanks, Amina.